High interest rates, which of course are set by the Federal Reserve, are absolutely crushing the mortgage market to the point where lenders are now demanding that their ex-employees give back their bonuses. I'm not kidding. And apparently this is a widespread practice at the moment. So let's get into the numbers before we share which lenders are actually trying to claw back, in some cases, hundreds of thousands of dollars from their former workers. So mortgage application activity is now at its lowest level in nearly 30 years, according to the MBA. Not NBA, MBA, in case anyone misheard that. The average loan officer closed 3.45 loans last month versus 8.15 in the same month in 2020. Now remember, there was a lot of refinancing happening at the time and interest rates were lit in 2020, super low. People wanted to take advantage of that. And the mortgage lenders had increased business as a result. Now, the pandemic ushered in the low interest rates, which prompted millions of these homeowners to refinance and others to even decide, I'm gonna buy a bigger home. Lenders wrote trillions of dollars worth of loans and added staff at a pretty rapid clip, often paying up to do so, and that included the signing bonuses, right? They're like, oh, there's a shortage of lenders, we need the workers, we'll give you a signing bonus. But when the Fed started hiking rates last year, the industry quickly swung from feast to famine, according to the Wall Street Journal. So many mortgage companies are growing desperate. They are laying off workers, merging with other lenders, or exiting the business altogether. Of the top 500 lenders 2 years ago, there are now about 435, according to Garth Graham, a senior partner at Stratmore Group, a mortgage advisory firm. And this unfortunately has translated to a complete and utter disaster for the workers in this industry. A lot of them are getting laid off, they're getting fired. Mortgage industry employment has already declined 20% to about 337,000 people, from 420,000 people in 2021. And that's according to the Bureau of Labor Statistics. And the MBA anticipates a further 10% decline. The employment tally includes mortgage bankers, brokers, and loan processors, but not real estate agents. So with that said, at the Mortgage Bankers Association's annual conference this month, a mantra repeated by a few speakers was stay alive until 25, meaning 2025, when things might get a little better, according to attendees. And what makes the situation even more difficult for the industry is that this is impacting them obviously very differently compared to 2008. Some former regulators and industry officials say the current period is worse than the 2008 financial crisis, when at least falling rates spurred a large refinancing wave. Because so many borrowers already locked in ultra low rate mortgages during the pandemic, there's no big refinancing rescue on the way, and they're definitely right about that. So thoughts on all of this, Helen?
This story is bananas, because basically these companies are calling their former workers and being like, hey, remember that $100,000 that you got as a signing bonus when we hired you? We're gonna need that back. And I was like, what?
Crazy.
You cannot invite me over for dinner and for spaghetti, and as soon as I start eating the spaghetti, you start trying to pull spaghetti out of my mouth because suddenly Rao's is $15 a jar. I'm sorry, you can't. You can't get the spaghetti out of my mouth. It's already in my mouth. That's a signing bonus that I gave you to start working here. Now you don't even work here anymore and I want that signing bonus back? That's bonkers. How is this even legal?
It's crazy. And look, okay, so these mortgage companies who are engaging in this practice of trying to claw back those bonuses argue that these former employees signed a contract which stipulated that they had to make a certain amount of, or close a certain amount of deals in order to keep the bonus, that the bonus isn't really a bonus, it's a loan until they close a certain number of deals. They're saying that that's the case, and really we don't have access to those contracts. I would really love to see those contracts and see if it's true, but the ex-employees are now suing because they don't want to give the money back. And likely they probably spent a portion of it, and it's gonna put them in a terrible situation. So with that said, let's get to the details of one of the lenders that's reaching out to former employees and what's happening here. So one of the companies is actually Chicago-based lender Guaranteed Rate. So Guaranteed Rate is the name of the company. Guaranteed Rate happens to be one of the biggest mortgage lenders in the United States. Its name is apparently on the White Sox's home stadium, and its mortgage production surged from $37 billion in 2019 to $115 billion in 2021. So when interest rates were low, they're in hog heaven, they're doing real well. I mean, they were so desperate for employees that they were poaching people from Wells Fargo, which led to a Wells Fargo executive to tell, their executives, please stop doing this. And they're like, no, we're not gonna stop doing this. You're mistreating your bankers. I mean, I don't know if that's true. Wells Fargo does suck, but poaching employees also sucks. Now, the company brought on veteran bankers from big mortgage shops, aided by an internal software program known as Golden Goose that identified people to hire and what signing bonus to offer them, people familiar with the matter said. Many bankers were handed hundreds of thousands of dollars up front. The highest performing few got 1 million or more.
Whoa.
Maybe I need to get into the mortgage lending industry. Anyway, the bonuses were typically structured as loans forgiven after 2 years. But here's the catch. When interest rates started rising, they started firing people just before the 2 years were up. Just before the 2 years were up. So now the chickens have come home to roost because the company is clearly so desperate for the cash that they are reaching out to these former employees. Dave Siegel went to work for an affiliate of Guaranteed Rate back in 2021 and got a signing bonus of more than $100,000. Now that business has dried up, the mortgage company wants its money back. He said it fired him just 1 month shy of the date when it could no longer ask for the bonus back, then demanded the money. And so he, along with other former employees, are now suing the company in order to keep the money. Lawyers representing the mortgage company claim that they're not doing anything wrong here. And if anything, it's the former employees who failed to keep up their part of the deal. So let's look at that graphic. The former employees, according to the general counsel for Guaranteed Rate, who have been sued, know very well that they signed agreements, including promissory notes, making it crystal clear what they needed to do to receive and earn the money. And in addition to that statement, general counsel also said they have been sued because they have and continue to blatantly violate these agreements and have steadfastly refused to repay what they clearly owe to the company. And guess what? Believe it or not, signing bonuses are not unusual in the mortgage industry, and they were particularly big during this recent boom, right? When interest rates were low. By the way, neither are attempts to claw back that money or attempt to claw back that money. Nations Lending and Cross Country Mortgage in Cleveland have also been tussling with former employees trying to get that money back. It's insane.
I wanna know how fine the print was. On the contract that said, we're gonna give you $100,000 signing bonus. By the way, it's not really. You gotta make a certain amount. Otherwise, you gotta give it back. Like, how small was that print? And also, I love that the name of the company is called Guaranteed Rate. Guaranteed Rate, unless mortgage rates go sideways, and then not so guaranteed
for our employees.
Workers.
Exactly. It really is amazing stuff. So, as we all know, like, the housing market has been absolutely brutal for ordinary people, and apparently we've got some company with mortgage lenders. So.
Hey, thanks for watching that video. We really appreciate it, guys. And we appreciate it if you become members, because that allows us to be independent, honest, progressive, all the things that you don't get from corporate media. And all of that is because of you guys. Hit the join button below and become one of us, become a Young Turk.